Good morning. Welcome to Stock Market Today. It's Wednesday, October 14th, 2020, and this is your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Go over to chaikinanalytics.com/today. Get a free email. Follow along with this show. Get daily stock ideas to consider all in your inbox every trading day before the market opens. So U.S. equities lower in Tuesday's trading. S&P 500 and the NASDAQ both broke 4-day streaks. Value and cyclicals lagged again. Banks under pressure following the first batch of earnings announcements. We'll take a look at the banks a little bit later on in the show. Treasuries were firmer with the curve flattening. The dollar was stronger on the major crosses. Gold was down 1.8%. Crude oil up 2% after losing 3% on Monday. And as we get to the desk this morning, it's a bit of a mixed bag. Futures have been back and forth, positive and negative as I've seen them. Down about 20 basis points here, reversing earlier gains. And that comes after Asian markets were mostly lower overnight, led by South Korea, China, Australia, and Taiwan. Japan did close higher. European markets are higher. Treasuries are mixed. Dollar is bid against the euro, but weaker against the yen. Gold is up 40 bips, and WTI crude is down about 1% to kick us off on a Wednesday morning. After stocks drifted yesterday, let's just call it what it is. It was a drift. We had a nice day on Monday, and then yesterday we got the drift. Why the drift? Well, stimulus and vaccine hopes remain just that, hopes. Any sort of concrete news on either of those remains elusive at this time, right? We've seen the back and forth in Congress. We know what's going on there. Looking at it purely from a game theory perspective, my honest view is, why would Nancy move? There's no need for her to move, especially if she believes the polls, right? And we can talk about what that means from a human perspective for the economy here in the near term. But the simple fact of the matter is, with less than a month to the election and the polls pointing in favor of a blue wave to coincide with a win by Vice President Biden, from a game theory perspective, there really is no reason for Nancy Pelosi to move off her offer. So that's just the way it is, unfortunately. Remember, for those of you who have been following me for a little while, my base case has always been that stimulus is after the election, that, before the election would be a nice upside kicker, but not likely. So what does that mean? SPYs, we're still playing for the September highs leading up to the election. Same with the Qs. IWM playing for the January highs. Now, what I will say, and I go through this in detail in my note today, is based on our near-term or short-term overbought, oversold indicator. The major markets are overbought. They've been overbought for over a week. So would not be surprised to see some choppy trading here in the near term, right? Trend perspective, higher. Near term, wouldn't be surprised to see some chop, some backing and filling, given the overbought nature, right? The way I frame it is, we are overbought within the context of an uptrend at this time. So your time frame matters. My bigger picture view, especially in light of how we utilize our research process here at Chaikin Analytics, is a more intermediate term time frame. So the trend is still higher in that time frame, but in the near term, certainly overbought. All right, let's hit our market in a minute. What are we writing about today? Well, stocks drift as vaccine and stimulus remain in the distance. We hit on that already. Sentiment becomes more greedy again. Major U.S. ETFs, as I said, are near-term overbought. Personality change for the capital markets. Everybody's watching the banks, but the capital markets kind of look interesting to me here. And as I said, futures do point to a mixed open here today. From a power bar perspective, let's look at the major averages now. The Dow down 60 basis points yesterday. We moved back to an even position on the power bar, 5 to 5, bulls to bears there. S&P 500 down 64 basis points. 136 to 65 bulls. NASDAQ unchanged on the day. So I guess we will call them an outperformer. 37 to 4 bulls to bears there. Small caps an inline performer to the downside. 766 to 233. Bonds uptick, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Major indexes across the board, however, are mixed. Let's take a look at our stock of the day. Speaking of nice trends from an intermediate term perspective, but some near-term consolidation. Zoom, we all know it. We're all using it. I'm using it right now to come to you on this show. Zoom has a bullish rating at Chaikin Analytics, strong trend, strong industry group. See here trading above the rising long-term trend line. You know what I think about software, right? I am in the bullish camp as it relates to software from a big picture secular perspective. Zoom's rating just flipped bullish recently. It's been an outperformer, but what's interesting to me now is we turned bullish, we're outperforming, we're oversold, right? The whole market's overbought. And here's Zoom, oversold within the context of this big picture uptrend with potential to come out of the consolidation. Money flow is bullish. I think if you're looking for a bullish idea here, Zoom certainly fits the bill. Take a look at Zoom video. You've been looking at it since March. Take a look at the stock here if you don't already own it, or if you do and have some room, right? Everybody does their own position sizing, but if you have room to make this a bigger position, I think it makes sense. I think if you have room to open, I think it makes sense. Take a look at Zoom here, ZM, our bullish stock of the day. Sector tracker, movement of the major sectors over the last 5 days of trading. It's nice to see the groups that I like the most at the top of the list. Information technology, comms, discretionary, right? That's our growth theme. That's the growth portion of our big picture economic view of stagflation in a no growth or a little growth environment. We want to own what's growing. These are our 3 favorite sectors to play that. They're at the top of the list. And after that, the inflation portion, we like materials, we like industrials. Those are middle of the road here after having decent performance over the past few weeks. So they're backing and filling a bit. What's encouraging realistically, though, for the market in general is the fact that all of the sectors are higher over the last 5 days. Now, our bond proxies are under pressure. So from a risk standpoint, we like to see that. Energy, you know how I feel. Financials, I'm watching it with intrigue. I've talked about it. Not doing anything yet. I'm watching these banks closely. Not off to a good start yesterday, quite frankly, which is why I said we're watching, not doing. But there are signs of diminishing trend to the downside or diminishing strength in the trend to the downside. So it makes a ton of sense to me to be paying attention there. But JP Morgan and Citigroup yesterday, not really getting the job done. We'll hear from a lot of other banks throughout the day. However, cap market stocks, kind of interesting. So we'll look at those. Let's hit our industry in focus now. Oil and gas, equipment and services, and dumpster fire, train wreck, whatever you want to call it. That's what this group has been and remains. Underperforming the S&P by 15%, 14% over the past 6 months. Power bar ratio is weak, 5 bears to 3 bulls, ranked number 17 of 21 subsectors, down 1 slot over the past week. You know how I feel about it. AROC, Archrock, Core Labs, CLB, and Drillquip, DRQ, all with very bearish Chaikin power gauge ratings. If you're looking for bearish ideas, this is obviously some fertile ground. It has been for some time. Maybe one day it won't be again, but that day is not today. This is still just a disaster of a group. I mean, and you can see it. Check it out here. Brief pause and now resuming to the downside. So disaster, pause, resuming to the downside. Look at the underperformance, the relative strength against the SPY down here. It's been a mess for over a year, probably closer to 2 years. Money flow, mixed, no real traction to the upside. So just can't get excited here, right? And I know that there are smart people out there calling for the bottom in energy. And, you know, I just come back to this old saying, I don't want to be early. In my mind, being early is the same as being wrong. Okay, there's no 2 ways about it, especially if you manage other people's money. If you manage other people's money and you're early, you're wrong, right? If you're managing your own money, you're not going to fire yourself. So if you're wrong, great, take it as a learning lesson. But okay, I'd rather wait for the trend to reverse. And I'm just not seeing signs of a trend reversal yet. So rather than be a hero and stick my hand out there and have the knife fall through it, I am going to wait for clear signs of a trend reversal, right? I did it with materials. I did it with industrials. I'm watching financials because downside momentum is waning, especially on a relative basis, but it's just not there yet in the energy complex. So you can get your hand cut by the knife. I'm going to hang back here and not be early. That's my view on energy for now. Let's look at what's trending now. Yesterday's movers and shakers, gainers and losers. WAT caught an upgrade up 7% yesterday. Nothing on eBay. Maybe getting some lift from Prime Day. I don't know. I'm guessing up 4% yesterday. Etsy, new highs, up nearly 4% on the day. BlackRock reports earnings and that stock higher by 3.9%. Nothing on Domino's there. One of the clear winners. This is actually just closet been a great company for about the past 10 years and a great stock. So that's kind of interesting to me. I've missed it. What can I say? But they've certainly been a pandemic winner. Maybe that lasts, maybe it doesn't. I have exposure to other areas of the restaurant group. I like McDonald's and I like Shake Shack. So those are names that I'm currently long. And I've missed Domino's. Okay, moving on. We've caught others. Let's check a look at the loser side of the board now. That's check a look. Let's check out the loser side of the board right now. Royal Caribbean. Did a debt and equity offering and also provided a business update where they talked about trends and pricing. So add all of that up and Royal's down 13%. Extrapolate their commentary on trends and pricing, and you get Norwegian down 8.25% and Carnival down 7.75%. If there is a group out there that needs a vaccine, it is the cruise lines. Obviously, we saw the Johnny John news yesterday. The vaccine news has just not been good, right? Stalled trials, just not what we're looking for as a society. I personally don't like cruises to begin with. People like them, which is great, but hard pressed to see getting on a cruise ship and before there's really solid signs of vaccine. So that group is going to remain volatile and very news driven. SL Green, Manhattan office REITs under pressure. In Fox A, I didn't see anything company specific to drive trading there. Let's look at the sentiment work that we do on Wednesdays. Put call ratio back towards greed position. The option bulls are back. Some chatter earlier this week of large call buying in the mega cap names, the names that were in focus back in August, right? We're seeing that play out here again a bit today. I think that was a big part of the move that we saw on Monday. Take a look at the 13-day moving average of the CBOE equity option put call ratio moving back down towards those lows, sub spot 5 on the average, right? All while the VIX continues to hover in the mid 20s, but really isn't taking off, right? So sentiment becoming, I'm not going to say frothy. It's certainly not frothy, but options positioning is frothy, right? Overall sentiment, I'd call it mixed with a bullish bias, but options positioning getting frothy again. Take a look at this chart, right? It's very similar to levels we saw back in August leading into September, where we saw the kind of the tantrum by the NASDAQ. Call it what you want. A 12% move to the downside or so is I guess it's a tantrum compared to, what we saw in March and April, or February and March rather. But, just mindful of what's going on here, paying attention to what's happening, all while the VIX remains bid and is likely to continue to stay bid through the election. Okay, so take a look. Sentiment, I'm not going to call sentiment overall frothy. I'm going to call sentiment mixed with a bullish bias, but options positioning, I'm going to call frothy. Now, banks are in focus, and for good reason, right? It's earnings season. We always want to hear what some of the big bank CEOs have to play, right? In theory, they have their finger on the pulse of what's going on in the economy. And obviously, Jamie Dimon is well regarded and well followed, so we pay close attention to what JP Morgan says. But taking a look at the financials in general. Now, remember what I said about financials. Downside momentum for financials as a group are waning, right? Financials are much more than just banks. So I wanted to dig into the industry level a little bit, and I looked at capital market services. Now, let's call it what it is right now. It's overbought as it's trying to break out here, and it's a thin ETF. I'm not saying you should go out and buy the ETF. What I'm saying is this is an interesting group that is showing relative strength. Take a look at the scooter breakout at the bottom of the screen, all while the RSI is moving into an overbought position. So we have some upside momentum after failing to become oversold on the most recent test of the 200-day moving average. So if I'm interested in ideas in the financial space, right, well, the banks are getting all the attention this week. I'm just going to slide over here to capital markets and look at some of the 25 names that have a bullish or very bullish rating at Chaikin Analytics that are holdings within this capital markets ETF, right? Because here's the banks after day one. Take a look at KBE, rallying to the 200-day moving average and then fading yesterday. Now trying to get going. Look at the scooter, nice pop on the scooter, but also at the same time, look at the RSI, how it could not become overbought. So, over here you have cap markets breaking out, becoming overbought. Here you have the banks fading from a key resistance level, the 200-day moving average, and not becoming overbought. Financials are much more than just the banks. Drill down, take it a step further. You may find some opportunities. That's going to wrap us up for today. Take us for a test drive, chaikinanalytics.com/test drive.